Hello guys, welcome to the 13th video in the Aerial FX Beginners course. In this video we will be discussing risk management. So risk management and trade management are going to be so crucial to trading in the foreign exchange market, really any market that you're in. Okay, risk management is the number one thing you should be focusing on to achieve long-term consistent profitability. So why is risk so important? Risk is so important because, like I just stated, it allows you to trade for tomorrow and not today. What I mean by this is that it allows you to, even if you lose a trade, continue to trade the next day, regardless of a few losses you may take today. So that's really the basis behind risk management. It allows you to achieve long-term consistency within the market when your risk is consistent. Okay, so risk management is going to be absolutely essential part of your trading plan. It should be, and it's really an essential part of trading in general, regardless of if you're trading Forex, indices, futures, stocks, cryptos, whatever that may be. Okay, so risk management is going to be really the deciding factor on whether you become a professional trader or if you stay an amateur trader, a beginner trader, and not really break out of that, I guess, bad habit that you could be trading with. If you are over leveraging and not using risk management, you're not going to achieve long-term consistency. Okay, you're going to fluctuate with massive losses, massive wins, and it's never going to be consistent for you. So let me just show you a really quick way that you can quickly identify what you need to be risking based off of how much you want to risk. So what I like to use personally is Position Size Calculator. It's found on Google. It's by MyFXBook. So just type in Position Size Calculator, MyFXBook, and it'll pop up with the first tab on Google with this page. Okay, so now I guess the next question I want to get into before I really get into this question is what to risk. So what are you comfortable risking? Okay, this all comes down to your risk tolerance. Are you more of a risk taker? Are you more conservative? And it really doesn't matter. It's just what you want to risk. I personally don't risk more than 2%. So it depends on the setup. 1 to 2% is what I risk. And there's really no need to go higher than that. Okay, the reason why is because when you get into your 5%, if you risk 10% per trade, let's say you go on a 3 or 4 trade losing streak, risking 5%, that's 20% of your account gone just like that. So let's say you have a $1,000 account and you risk 5%. Okay, 5% of $1,000 is $50. Okay, now let's say you have 4 losses in a row. All right, so you're down $200 off of your 1,000. So now on an $800 account, you can only risk $40 now. So yes, your loss will decrease when you lose, but so will your profits because you're going to have to be using a lower lot size. So let's say you're only risking maybe 2% on a $1,000 account. That's only $20. You maybe have a 4 trade losing streak. That's only $80. Okay, so you still have, all right, you still have $920 to work with. Times that by another 2%. So instead of risking 20, you're only risking 18.4. But that's very, very similar to that 20. Instead of the $50 down to $40 example I gave you. So it still allows you to make similar profits using good risk management and using lower risk. But if you have like a $100,000 account, you don't need to be risking 5%. Okay, that's absolutely insane because even with a 1% risk, you're still only risking $1,000. You still have a 1 to 5 minimum risk to reward. That's what we send out for our members. That's still $5,000. Okay, so $5,000 is great. All right, so you don't need to be risking. As your account size increases, your risk should decrease. That's really how I do it, and that's really how everyone should be doing it, in my opinion. Okay, you don't need to continue to risk 5% on an account when you get to the 10,000, the 100,000, the $1 million account size levels. It's not smart, in my opinion. 1% is absolutely great. Okay, so using Position Size Calculator, what you would do, and if you don't use this, I highly recommend using this, simply type in your account size. What's your account size? Let's say it's $10,000. All right, so what you could do is either swap with risk or swap with money, meaning you can risk a percentage or risk a monetary amount. Okay, so I can click swap with money and I could risk, let's say, maybe $50 for this trade. All right, but in terms of percentages, we're going to go with the risk. So in this case, let's say we risk 1%. We click 1% here. The stop loss, let's say the stop loss is 20 pips, and we're trading Euro USD, or excuse me, Euro USD. All right, click Euro USD. We push calculate. On this particular trade, you can use a 0.5 lot size. Now, let's say your account balance is not a perfect amount. Let's say it's $689, and you want to risk 2%, and your stop loss is 23 pips. Euro USD, calculate it. You can use a 0.06 lot size. Okay, so it calculates the lot size that you need to use per your risk and per your account size with the stop loss that you are using with the pair you are trading. Okay, so it's a very helpful tool to calculate risk and calculate your lot size needed so that you can maintain consistency in your risk. Okay, so the next thing I want to go over with you guys is understanding your target levels and your stop loss levels. So this is going to be the very most important thing, in my opinion, when it comes down to risk management. It's like a subsection of risk management, understanding where your proper stop loss and target levels should be placed so that you can place entries based off of risk management and proper lot sizes according to your the trade that you're placing. So to break it down for you, just to give you a little example, on USD CAD, okay, we had a trade that we sent out to our members, I believe it was about a month ago, so that would have been in the May time. So what we can do here, short position, we took a trade here. Now, understanding your target levels are going to be very, very important, okay? So you can't just place target and stop loss at random levels. You just can't do that, okay? So you have to understand where is a proper stop loss, all right? So you can't just be like, oh, well, I trade a 30 pip stop loss every single time. Well, fine, all right, we trade 30 pip stop loss with this one. 30 pips is right here. 30 pips. I mean, yeah, it didn't quite come to it. Sure, so you would have been fine, but what if you only had 20 pips? Or let's say price came up a little bit higher into this candle of interest. Sorry, I'm getting all these notifications. It came up into this area of interest here, this candle, you would have been stopped out. So you have to be able to place your stop loss at the correct positioning based off of what you see to the left. Okay, you can't just be like, oh, I'm going to use a 30 pip stop loss, 40 pip, 50 pip, 25 pip, 20 pip. No, you have to use a reasonable stop loss in accordance with like what you see to the left, what you see what's going on, where price could potentially come to past your entry point. So really, where you need to place your stop loss is at an area where price, if it comes to it, it's probably just going to continue. So for instance, on this trade, you have to place your stop loss above the body here in this candle. Okay, so that in this case was about a 59 pip stop loss. I think we had about a 58 pip. I move it down a little bit. But anyways, 59 pips, that's a reasonable stop loss. Okay, where are your target levels? So now I understand my target levels. I'm not going to give you a huge, in-depth technical analysis breakdown on this, but reasonable targets are going to be your recent swing points. So your recent swing points may be this low here, okay, this low here. Maybe if we pull a fib from the high to the low, we can maybe grab the negative 27 or the negative 61. So a first target can be here at equal lows, right in here. Second target could be here at these equal lows, right in here. Third target could maybe be at the negative 27. Overall target could be a negative 61, something like that. All right, but anyways, let's say you do have 4 entries. And what I mean by 4 entries is you have 4 entries from this level, but your take profit has 4 take profits. So you're having 4 entries, but the entry is still the same, but you're having different take profits. That's why you have multiple entries. So one take profit is going to be right here. So you have one entry here to take profit here, one to take profit here, one to take profit here, one to take profit here. All right, you want to understand where is a good place to be positioning your take profits so that you may be able to take profit at the correct time, just in case the trade or the price ends up reversing on you unexpectedly. Okay, so in this case, let's say you use position size calculator, you calculated your lot size. Let's say you came out with a 0.2. So you're able to use a 0.2 based off of the stop loss here in the pair that you're trading. Okay, a 0.2, but if you have 4 take profits, you're going to split that 0.2 up 4 ways. So you would have 4 entries at a 0.05 apiece. So it's maintaining your risk each time, but you're splitting up your entries so you have a 0.05 for each. So a 0.05 to the target here, a 0.05 to the target here, 0.05 to the target here, and a 0.05 to the target here. Overall is a 0.2, and overall you're maintaining your risk with each individual take profit that you're using. Okay, that's going to be very crucial in determining what lot size you need to be using and where you should be positioning your stop loss and your take profit for that particular trade. All right, now I'm not able to show you on my computer how to take partials. If you do not use this particular strategy that I just told you, and you have maybe one position, but you like to take partials at certain positions, that is absolutely okay. I can run you through how you do this on your MT4, but I'm not able to show you on the computer because I don't have that application. So if you go into your MT4 right now, okay, so you can pause this video, go into your MT4, then click resume, whatever you need to do. But go into your MT4, okay, open up the current trade that you're in, right, if you are in a trade. All right, what you would do is you would hold down on that trade, you would click close, okay, click close, and it comes up with a screen that displays your lot size and your current running profit. What you would do is you would adjust your lot size. You can only decrease it, you obviously can't increase it, but you can decrease the lot size. So you can just push the minus sign as whatever many points that you want to, okay? And that will take out a certain percentage of the trade and leave the rest to ride. Okay, so let's say you have a 0.2 in there and you want to take out half your position. You just decrease your lot size until you get to a 0.1. That means you're taking out 0.1. Now let's say you want to take out 0.15. Okay, so you would take out 0.15, meaning you keep hitting the negative bar that's beside the lot size until you get to 0.15, and that's how much you will take out, and the 0.05 will remain running on your account. Okay, and then you push close, or not fully close, you would just push close to take that specific partial, and then you would have the rest to ride. Okay, so that's how you take partials on MT4. I do this on occasion, and I know a lot of other people who do it, and it is very helpful in not only taking or securing some profit, but also letting the rest ride for a runner to potentially gain more. Okay, so the next thing I want to discuss with you guys is, are you getting your minimum 1 to 5? Now, you don't have to use a 1 to 5 minimum. For Aerial FX, we use a 1 to 5 minimum. We only send out and only trade at least 1 to 5 risk to rewards. All right, in this case, this is a 1 to 6.5. This is a great trade all the way down here. Now, if this was any less, if this was a 1 to 4.67, we wouldn't be trading this because it does not meet our risk to reward rules. We need to have at least a 1 to 5 risk to reward for our rules, and that's what we like to use, because we can be consistently profitable over the long run. All right, so even if we do lose, 1, 2, 3 in a row, we're still okay, because on that fourth one, we win it back and some. If we lose 4 in a row, which doesn't happen often, but if you lose 4 in a row and then you win the fifth one back, there you go, you break even. So it really allows you to be 20% profitable and you're still break even. We're not 20% profitable, we're way more than that, but you get the gist. Okay, so let's say you are your minimum risk reward is a 1 to 10. 1 to 10. So 1 to 10, you can lose 9 trades in a row and win the next one and make it all back. So that allows you to be 10% profitable and still break even. Now, if you only have a 1 to 2 risk to reward on each trade, you have to be 50% profitable to break even. Okay, so the better risk to reward you have, the more trades you're able to lose and still regain that amount back on the next trade. Okay, so that's very important. Risk management allows you to maintain consistent risk and allows you to maintain that psychology as well, meaning that you don't care, you shouldn't care if you lose a trade, because if you lose a trade on a 1 to 5, it doesn't matter. I don't care if I lose a trade on a 1 to 5. That's only 1% for me, maybe 2%, but it doesn't matter, because the next trade I lose again, whatever. On the next trade I win, great, win it all back and some, and I profit. So it doesn't matter, because I know my strategy works, and I know in the long run that I will be consistently profitable using good risk management. It is very, very crucial to build up your account and compound your account. Those of you who over leverage or use inconsistent lot sizes in accordance to your risk, that is going to jumble up your account size. It's going to go up, 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 down, 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 up, up, down. It doesn't matter where it goes. It's just going to fluctuate. So nothing is going to be consistent. You can win 2 in a row, up, up, then lose 3, down, 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 but maybe you over leveraged on the ones that you ended up losing on and under leveraged on the ones that you ended up winning on. So it's not consistent. You have to be consistent in your risk based off of your account size and the proper risk that you are willing to take. You should never risk more than you are willing or unwilling to lose. Okay, so if I am just not going to be happy losing $500 in a trade, I shouldn't be risking $500 in a trade. Okay, only risk what you are willing to lose. Okay, that's how I like to put it. And lastly, the last thing I would like to talk to you about today is that it is not about how many pips you catch. It's about the percentage. Oftentimes people will ask me, how many pips did you catch? How many pips did you catch? How many pips did you make here? How many pips did you make there? Well, and I tell them it doesn't matter about the pips, because think about it like this. I can risk 59 pips and make 275.4 pips and have a 1 to 4.67. But I can also maybe reduce my stop loss with a better risk to reward. Obviously not on this trade because the proper stop loss is up here. Let's say I have a 24 pip stop loss. I can reduce my take profit all the way back down to 112 pips. So I would only need to gain 112 pips risking 24 to gain the same percentage. It's all about percentages, guys. Okay, so think about it like this. You could have a 100 pip stop loss and then a 500 pip take profit. That's a 1 to 5. Or you could have a 5 pip stop loss and a 25 pip take profit. Okay, and that's still a 1 to 5. You're still gaining 5% on your account regardless. But people brag about how many pips that they catch. I don't care about how many pips you catch. What's your percentage gain? That I will beat you on every single time, because I don't care about making 1,000, 2,000 pips in a week. I don't care. As long as I get that percentage that I want, that's all I care about, because that's how much money you will make. Okay? Because think about it like this. If I have 24 pip stop loss, I'm able to increase my lot size. This allows me to get to my take profit and catch the same amount of percentage as I would risking 59 pips and gaining 380 or whatever. So it's really just about the percentage. Okay, this would take maybe days and days and days, weeks and weeks and weeks, whatever it may take. This right here, the same lot size, or excuse me, the same risk, would take maybe a day or so, less than a day. I want my money sooner than later, right? And I'm sure all you guys do too. So not necessarily lowering your stop loss, because you still have to place it at the correct position, but finding trades that give you lower stop losses and maybe potentially lower take profits, but still maintaining that risk percentage and having at least a 1 to 5, me personally, it doesn't matter about the pips that you catch. It's really all about the percentages. Just think about this, guys. What's 50% of $1,000? It's 500. Doesn't matter how many pips it takes me to get there. It's all about how much percentage I make in a trade that allows me to get there faster. Okay? So I hope you guys took something from that. I hope you understand more about risk now and the importance of it. So if you have any questions for me or for the Aerial FX team, please do not hesitate to ask. We are here for you. Just send us a DM on IG. Any questions you may have, we'll be happy to answer it for you. So I hope you learned something, and let's get ready for the next video.